Welcome. This is Power Trading Radio Live, fueled by Online Trading Academy. For more information, visit powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello, everybody. Welcome to Power Trading Radio. Merlin Rothfeld with you for your weekend edition. Made it through another week. An interesting one out there as we wrapped up our Friday trading session. We saw some markets that were... It started off with, well, let's just say the end of the day wasn't like the greatest of market activity. Pretty much unchanged for most of the major market indexes. We won't go through all that. Normally we do, but Bitcoin and crude oil are the exciting ones. More exciting than that, though, is my guest today, who is obviously not here in studio today. But we have the ambassador of opportunity, John O'Donnell, joining us today. So, John, how you doing?
I'm doing good, Merlin. How are you?
Great. Friday, man. Friday. You think that I'm excited because you're on the show. It's like 75% that you're on the show. It's the other 25% is I know that it's Friday and I have this whole nice weekend off in front of me. So you're always like a beacon of hope for my weekend.
Merlin, that's the kindest thing you've said to me in 22 years.
I know. I wanted to make sure that you knew that after two plus decades. What's new in your world? Are you not on set with us today? Something's got to be going on.
Is that about the closest thing I'm going to get to a Valentine greeting from you this week?
Oh yeah, the loveless Merlin. Yes, that's all you're getting. That's it.
I'll take the 75%. That's better than where I thought it was. I thought it was down at the 30% number.
Oh no! Don't spend it all in one place, John.
I'm in a bull market in love. I love this.
There you are. What's new in your world, man? I haven't seen too much of you recently. You been busy?
Well, I've been busy. I've been doing some events in our classes. We've been also kind of busy on working on some projects. I worked with TJ this week, and we put together a couple of John O'Donnell Chart of the Week series, and I've just been keeping busy. Keep putting one foot in front of the other.
Well, for those of you who have not seen John O'Donnell's Chart of the Week, he does one every week. That's why it's called John O'Donnell's Chart of the Week. You can go to Online Trading Academy's YouTube page. If you click on the videos portion there, you'll see a bunch of the archives of stuff that we've done, and John does one of those every week, and it's just some insights into a chart, or sometimes two, from the old John O'Donnell. All right, well, happy Friday out to you two, Redneck Trader and Jorge on our YouTube channels. It's awfully quiet for our Friday session.
By the way, Merlin, I did have the opportunity to, for the first time in the classroom, set into our new strategic investor class. And the students there were just absolutely ecstatic about the edits to the content that you and the team have put together. And so congratulations. They were...
Thank you.
Patrick Vale was the instructor for the class. He really does a good job, by the way. I was very impressed with his teaching of the new curriculum.
Yeah, he's great.
And, of course, they were using Click. And it was a very inspiring experience to see that all come together as quickly as you guys put it together and did the edits. And so congratulations.
Oh, thanks, John. Yeah, it's interesting for those that are at home and don't understand kind of how the content gets produced here. Generally, there is one focal point expert on content, and they'll generally map out the course, goes through a little massaging, and then the course is released. But what we've done is we took a previous course, which was edited, we'll say, by a couple different instructors, all of which have extreme amount of experience in the financial industry. And what we did is we sat there and said, okay, so it was Larry, Russ Allen, myself, and a couple others, and we all said, all right, how would I absorb this concept that's being taught in a clearer, more concise way? What's the fastest way for us to learn? It's really interesting because Russ Allen, who is one of our lead designers for educational content, he's much more of the wordsmith. He needs to have everything written out step by step, wants all the directions on the screen, whereas I'm the guy, I don't even need a word on the screen. You give me a picture or a diagram of how things go, and that's how I learn. And we have to understand that there's so many different people out there. Some people need the textbook, some people just need a graphic, and when we kind of put our heads together with others, all of a sudden we found ways to bridge those specific obstacles so I could come up with a graphic that Russ goes, you know what? That actually does convey everything that I would have written out and vice versa. So yeah, it's been fun. It's been a good experience, and hopefully you guys get a chance to participate in the Strategic Investor course. It's one of those things that we wanted to kind of touch on points that everybody deals with, which is understanding their retirement accounts, long-term investing, compounding, rates of return, and more importantly, establishing what those numbers are for you, because each and every one of us is going to be different in our requirements of rate of return, also our risk tolerance, the investments we put in, and even the accounts that we can trade. So yeah, it's been a fun experience to do that, and hopefully we'll have the on-demand on here soon. So I'm glad you got to sit on that one, John.
Yeah, I went through the proactive class a considerable amount of time ago, and it was good. I mean, I really enjoyed it. But this is really this workover, this rebranding of the experience. I even think the rebranding makes a lot more sense. At first, I was a little nervous about that, but after going through parts of the experience in detail and having some conversation with the students that attended the whole 5-day experience, I understand the rebranding importance of that, because it really does take a look at investing from a very strategic perspective.
Sure. Well, you know, I've said it on the show many times, I won't bore our viewers with it again, but my background was starting off as a financial planner, my first job out of college, and not as a financial planner. I worked for a financial planner. Let me be clear. I was not a financial planner. I was the guy behind the scenes that aggregated all of the assets from the clients. They would come in, and let's say John was the financial advisor. John would sit down with the clients. I'd be in the back room, and John would come to me with all their financial statements and say, Merlin, put all this stuff into spreadsheets. And so I was excited because I got to see the process, and I would spend tons of time making sure all the assets were broken up appropriately. You had your bond spreadsheets, you had your equity spreadsheets and other investment vehicles, which is really the stuff that we've put into the Strategic Investor course. For those of you who have not taken it, there's a great document. It's a strategic asset allocation document that we've built out that not only allows you to categorize all the different investments by category, which we break down in SI, but also allows you to break them within that subset of what those assets might be with anticipated rates of return based off historical numbers. So we start to really quickly look at what this portfolio of assets or investments that we might have should deliver. Most people out there, I know friends of mine who I've talked to over the years, they'll have 10, 12, 13 different accounts all over the place, and maybe an IRA here, or just an investment account there, trading account there, and don't really know what all of this combined equals. Putting it in a spreadsheet really does help organize everything, and it's a lot of the resources and tools we've created have been there to help you understand exactly what you have, so now we can move forward and figure out what our rate of return is. All right, going down the rabbit hole of strategic investor, we could do that all day. Anything in the markets that you find very noteworthy, John? I got a couple topics of my own I want to talk about, but I'll let you start first because I'm normally the long-winded one.
Yeah, well, I think we ought to take a look at oil.
Okay.
Oil's had a pretty good week,
Yeah.
all things considered. You know, we can talk about it since the first of the year, going from roughly $65 down to 48 and change.
Yep.
But we had a little bounce this week, and as a matter of fact, I think it's probably debatable. I don't know if I have a dog in this fight. I don't really have a position in oil, but in looking at the charts, you know, is this the start of a new bull market? I mean, have we had a double bottom? I mean, I don't know if you could pull oil up on our platform there, but or is this just a dead cat bounce? But I'm really anxious to see what kind of follow through we're going to get on this oil market next week and the balance of this month, and because I think that's very telling, and I think part of this. The primary reason for the decline, I believe, is the impact of the coronavirus. I mean, I don't have any doubt that there's a real question, because we had the spike up to 65 when we had the Iranian problem. But since then, you know, the economic softness or projected economic softness across the world is ultimately going to get priced into oil, and oil is pretty darn efficient at looking forward, pricing risk. And I think we need to see how this coronavirus statistic is going to play out. I've got some new statistics. I don't know if you want to get into that now or a little bit later.
Sure, why not? Yeah. Well, actually, let's continue with crude oil first, because I want to review.
All right. Yeah, but I think a big impact and variable in this is to kind of keep our finger on the pulse of oil. I think it's a kind of a leading indicator on how the world sees this coronavirus thing playing out.
TJ's got the chart up here for crude oil. I'm going to continue on. We've talked about this one over the past couple of weeks, especially at the beginning of the week. We were talking about this being a potential double bottom and how to play that. For those of you who want to go back and check out the archives on Monday's show, we were basically saying, look, this is a great opportunity, a potential opportunity to go long oil. But again, you have to make sure you have your stop loss in place. That's the most important part of that trade. We had actually talked about going long as it came down into these lows. With a stop loss just below these most recent lows, which would put you down around $49. Had a great move up. The target was actually where we hit today. We hit exactly dead on that target, right around 52.25. My comment also was if we closed above 52.25, which we did not, guys. Today we closed at 52.05. Even though we briefly tiptoed above this little blue line, we came back down and closed below it. So had you closed above 52.25, I would have been more confident taking this home. I agree with John. It's too early to say right now whether this is a dead cat bounce. For those of you who might not know what that means, as we know, cats do not bounce. Please do not try to test that at home. Just take my word for it. They land on their feet, but they don't bounce. So the thinking is that this either is an aggressive sell-off that might be overdone and we're just having a small little tiny bounce, which is the dead cat bounce, and then it's going to continue back down, or now that we formed this double bottom, we're potentially making a higher high. This may be that point where we start to reverse trends on crude oil. I, for one, am kind of in that camp. I do think that crude oil is due for a move back to the upside. You'll notice here that our lows that we achieved this week, right around 49.60, is really not that. It's not that cheap, meaning there still is some room for the downside. You see some lows going back into 2018, which tiptoed down around the $42 mark. It could certainly go lower, but based on what we've seen for the last year or so, it looks like we've just breached the bottom of that range, and we might be due for a little bit of a bounce. So hopefully you guys are managing this one. I agree with John. It's probably the most interesting asset class right now, other than the indexes, which are teetering on all-time highs. What are your thoughts on some of these indexes, John? Because I have some stats here that I find shocking as far as why the markets are moving up. But let's quick look at like S&P and get your thoughts on that one.
I don't have a chart of the S&P in front of me.
All-time highs. You got all-time highs for the S&P, the Dow, the NASDAQ. The only one that's not at an all-time high, although it's very close, is the Russell 2000. So they're all getting fueled to the upside.
They sure are. And the real question, of course, is how, when, and where are we going to have? We're so overdue for a correction. But let's face it, in the face of all the economic fundamentals that seem to be out there, assuming you can trust the data, this market just seems to want to push higher. Money's coming out of bonds. It's still going into equities. And I don't know if this election year has anything to do with it. We've had some ruffling in the positioning of the candidates, but probably that hasn't been priced in yet, as to who. The market's not telling us who very well may win this election. But I don't know. I'm just nervous like everybody else. There seems to be a tremendous amount of complacency out there. I'm like everybody else. You tell me, when's the correction going to come?
I don't know. I mean, you and I know darn well it will come. The question is how severe, how prolonged will it be? I think at this point a 10% correction wouldn't be bad. I think it would actually be healthy for the markets to have a 10% correction, and that might be something that helps.
I would agree. And if we don't have at least a 10% correction, I would consider it abnormal.
Right. And that's why I think this market at present moment is abnormal. All right, I'm going to leave a trivia question out there for you guys. Based off of January 31st, 2020 data, I want you guys to all type in a chat. Let's be interactive here and hopefully get some numbers flowing. I just want to, off the top of your head, you have the S&P 500, which in theory should be 500 stocks, but it's actually 503. Go do the math. Out of the S&P 500, there are 4 companies. 4. That is Apple, Microsoft, Amazon, and Alphabet, which is Google. Those 4 companies make up what percentage of the entire S&P 500 with regards to contributing to it? So they make up what percentage of the move up that's happened in that S&P 500? Type in the chat. What percentage of those S&P 500 do you think comes from just those 4 companies? Apple, Microsoft, Amazon, and Google, or Alphabet. When we come back, I will share that answer with you. It's pretty interesting when you look at the impact from those 4 companies. So type it in the chat. John O'Donnell is our guest today. We'll come back. We'll talk about that and a whole bunch more. Got a bunch of listener questions, so keep them coming. We'll get to all those questions right after a short break.
what if you knew the income strategies professional investors used? The strategies designed to generate active income from the financial markets. After all, no one's going to care more about your money than you.
I learned that I can be in control of my 401k.
I used to work for money, now I have my money working for me.
With the right training and guidance, you can learn the skills to become a more confident investor and make your money work harder for you. Want to find out what's possible for you? You can, as long as you're willing to take the first step and call OTA today.
Call for your free tickets right now, and you'll also receive a free Professional Insiders kit loaded with lessons from some of our top instructors on topics like enhancing your retirement strategy, capital preservation, and income generation. The Professionals Insider Kit makes it so you can get started right now.
Call 888-304-8723 or visit us online at tradingacademy.com and schedule your free class today.
Click is something I wish I had when I started because it facilitates the learning process a lot quicker.
This is not about taking many trades, it's about taking the right trade.
It helps me save myself from myself. It's just a revolutionary educational tool. It just propels you through the learning curve.
The biggest shock for me is the level of innovation that happens within the company, and it's continuing.
It's just perfect in this new century of trading.
Everyone's on the same side, and I think that's what I love about it more than anything else. Helping each other, supporting each other, all with the same objective. Again, wonderful.
There's no mountain high enough that the leaders in this organization won't climb for their students. They'll just never give up.
It can only help. It can only make one a better trader.
Gives you one of the most valuable things we all have, and that's time.
Welcome back to Power Trading Radio Live with your host, Merlin Rothfeld, and today's special guest.
Hello, everybody. Welcome back to Power Trading Radio. It is your weekend edition. John O'Donnell is our guest today. Before the break, I quizzed you guys, and maybe I worded it incorrectly, and I wish I had actually both numbers. Thank you, Big Eb. You're correct. There are two different factors to this. I asked you, the four companies, Apple, Microsoft, Amazon, and Google, make up what percentage of the S&P? I should have said total market value, but I misworded that one. Yeah, how much of the gains have been caused by those companies is a totally different question, which I would love to know the answer to myself. We had a lot of feedback on that one. That was great. Thank you guys for putting it in. So we've got Larry says 40%. Big Eb, you're at 24%. Jorge says 15%. And then we got a whole bunch. I've got 30 for Jeff, 10 for Brian. Don Armour says 85%. Now, that would be not really an index now, would it? That would be completely biased. That would be worse than the Dow with regards to index. Let's see, 2002 S40. Is that a Volvo S40? Is that your car? He says 30%. Oliver says 23. Paul with 5. Tom with 25. All right, there we go. The issue here is power and influence, and this is why I brought this one up. It was an interesting graphic that I found today from CNBC, which TJ will bring up for you. Those four companies make up 17% of the S&P 500's total market value. So, we talk about buying an index as a way to diversify your holdings, but basically you really have a significant exposure in this to Apple, Microsoft, Amazon, and Alphabet. Now, it's interesting because that number is probably changed as of today because just the stats I gave you were from January 31st, so just a couple of weeks ago. As of today, 2 weeks into February, Amazon's up 4%. Google's already at 4%. The S&P is up 4%. Okay, so those are about average. But you have Apple up 6.7%, and this is the surprising one. A lot of people thought Microsoft was just dead in the water, a mature company that's going to just not dissolve, but not do so well. They're up 8.7% for the month already. Clearly, this is the reason, or one of the major reasons, why you're seeing these market indexes continue to vault, because Microsoft is a member of the S&P, the Dow, and the NASDAQ. So there we go, you guys. There's a little bit of trivia and interactivity on there today. John, does it worry you at all that you have these four companies that are just such a major impact, and should something happen to any one of them, the impact it might have to the south side?
Well, if you were to take a look at the PE of Amazon, Microsoft, Apple, and Google, and if you look at them collectively as $4 trillion companies,
yep,
and let's just assume it's an average of $1 trillion of market cap. We know it's a little bit north of there. And then you were to look at what their combined earnings are and figure out what the PE ratio is. Obviously, Amazon is out of the top of the roof. You know, can't even hardly compute it. Microsoft's okay. Apple, from a PE perspective, is relatively modest, and Google. So all of them, and what they all have in common, if you really think about it, except for probably Apple, is they're very, very powerful in the cloud.
Right.
And the cloud is setting the world on fire. And if you look at Amazon having biggest market share in cloud, Microsoft number 2, Google kind of a third grower, but you never can discount them catching up. But Apple doesn't have that much in the cloud to speak of, except when you look at all the services that they're rendering through their smartphone channel. But yeah, you know, of course it concerns me. It concerns me when we don't have a correction. Like we said earlier, it's so abnormal. I'd rather see a correction, have these four or individually pick one of your favorite color, and pull back to a demand zone, and then get on board. Yeah. That's what I'd like to see.
I agree. I hate that I'm even going to go down this rabbit hole of a comment. I have to do it. Big Eb, you're killing me, Smalls. He so we called it FANG stocks, right? It was Facebook, Amazon, Netflix, which is still obviously a very volatile one, Google, and then Apple. And Big Eb, I think you may have changed something. You might want to put a patent on this because you probably talked to our president, our Twitter-in-chief, and he's going to steal this one. Big Eb says, I hate to even say it because I don't want to give support. Where he says, I found it. Google says that MAGA stocks, M-A-G-A, there we go. You coined it, Big Eb, make up 70% of the gains for the S&P in 2020. That is scary as hell. And the reason that I'm worried is we talked about margin yesterday on the show and how people are really dipping into margin heavily to buy into this, which of course is part of the reason we see the fuel to the upside here for Apple, Microsoft, Amazon, and Google. The crazy part is if something should happen to one of those stocks, the power it could have when it gets pulled to the south side. That's always my concern. You know, we talk in Strategic Investor extensively about the purpose and point of diversifying. For the short-term day traders, who cares, right? Buy Apple, Microsoft, whatever you want. Just make sure you have your risk management in place so you don't get burned. But an index should give you some protection from these, I'm not going to say black swan events, but a big drawdown in one company. But if one of those companies is so powerful, that creates a problem. I got another trivia question for you guys and gals. Those four companies, Apple, Microsoft, Amazon, and Alphabet, you would think that their PE ratios would be astronomical. 3 of them are in the 30s. We have a 30. Well, okay. We have a 30, a 25, a 32, and a 92. It means that there's a serious valuation anticipation of earnings going forward. I'm just curious, which company do you think has the highest valuation at 92 PE ratio? Is it Apple, Microsoft, Amazon, or Alphabet for our weekend trivia show? Go ahead and type into the chat. I like getting you guys chatting and active out there. John, what do you think it is?
Oh, I think it's Amazon.
Think so? Why would that be?
Well, because whatever free cash flow they generate, they turn around and reinvest it. And they're not, you know, Amazon's selling on a complete pivot to digital transformation of retail. And Jeff Bezos has grand ambitions of totally disrupting the distribution of consumable goods, hard goods especially. So, you know, they have tremendous free cash flow, but, you know, they're going to reinvest it, and they're going to continue to grow and grow and grow, and I would think it's the highest.
Well, you would not be alone. Jeff, Tom, Paul, Austin, Don, those that are participating out there today, also Big Eb, James, and Kent Rock. All right. You're not from Michigan, are you, Kent Rock? Everyone said Amazon. I think that's pretty clear. At what point do you think, and this is maybe something that becomes a topic of discussion with regards to Amazon's size, because they are just getting bigger and bigger and their tentacles are in everything. Do you see a point coming, John, where there's antitrust against Amazon?
Well, if you take a look at their total market share, it's still about 5% of the total retail pie. You know, so they are disruptive, no question about it. But, you know, other people like Target and Walmart have develop. They were slow to the party of developing digital order entry, but they've come on strong. You tell me now, with just 5% market share of the whole retail pie, there's plenty of people spending money elsewhere for retail consumption.
Yeah, I agree.
However, they may get politicized. I mean, Mr. Bezos bought the Washington Post. He's come under some fire and some tweet storms from our president.
He's got to keep his clothes on in his Instagram feed, too.
Yeah, and who's to say, next thing you know, we have a run at it. So, is it possible? Sure, it's possible.
Well, because to me,
it's also possible for Google. I mean, what's Google have? 90% of the search?
Yeah, maybe. I look at it this way, and you're right. I think most of us agree the retail space is definitely taking a big hit, something you and I have been talking about for the past few years on how malls have just been getting crushed. It would not surprise me, and this is where I think the antitrust might start to step in. Amazon doesn't really have physical locations. We could talk about Whole Foods, but what I think you might see happen is somebody like Target, right? Target right now has a market cap of $59 billion. I'll bring it up here. I wonder how much free cash Amazon has. They probably have more than that in cash. Of course, they would probably do a stock offering and buy Target. But if I'm Amazon and I now all of a sudden want to have distribution hubs, and I also want to make sure that I have a retail footprint and take even more of that space and compete physically with Walmart's, then I would go out and I would buy somebody like Target. Would I be crazy to do something like that to further bolster my space in the retail?
Sure, why not? I mean, how many people forecasted they were going to go out and buy Whole Foods?
Yeah, that was an odd one.
Apparently the next innovation in retail is where you order online, and we'll either ship it to you, and by the way, they're building their own shipping functionality, moving away from FedEx and perhaps UPS. So they're going to have a fleet of planes and trucks and everything else going on out there especially for the last mile to the home. But who's to say? Now that you can order goods online, if you have a nice brick and mortar footprint, who's to say you can't go to a local store and pick it up? I mean, that's what Walmart's doing. They give you, and I think Target allows you to do that too. So as they catch up on digital order entry, the consumer has more choice.
Right.
And I think the consumers are going to like that, assuming prices are competitive.
I definitely like it. I'm an Amazon shopper. I mean, it's funny because I'll sit here. I have Alexa at home too, so yes, I'm sure they're spying on me and learning all that they need to know about how I'm watching reruns of Criminal Minds on a weekly basis. But I just holler out if I need something like Alexa, remind me to grab some toilet paper or something. I love it because now it sends it to my phone. Now that I can actually order it straight from that device. But sometimes I don't want to wait the 24 hours or 48 hours to get it delivered. And there's a Target right down the street from my house. So it would make sense. But I just think at some point when you have this monster which is Amazon, and I've always been bullish on Amazon since the day I even heard it in the late 90s. I'm still bullish on it, and I think that's why you have the 92 PE ratio for Amazon, is that expectation, because it's not just the retail space, it's also the AI, it's also the cloud storage, it's basically everybody's information and data. So bravo Jeff Bezos for taking it from a bookstore to what it is today.
By the way, I heard an analyst, I think it was 2 days ago, talking about the valuation on AWS, their cloud provider. Right. They think that AWS is worth 50%. AWS division alone is worth 50% of the market cap of Amazon.
Wow, that's incredible. Yeah, it wouldn't surprise me. It wouldn't surprise me. David, you made a comment. You said they already have Amazon lockers. They do, but those are like in 7-Elevens and weird little places like Kohl's and things like that. How much more simple would it be if they just own Target, right? Now all of a sudden there's a whole wall of just Amazon lockers plus all the stuff is there. Interesting, yeah. Anyway, I just throw the hypothetical out there. That's what we do as investors, is just do hypotheticals.
Yeah. But think about this too, Merlin. I think there's a consciousness among the American consumer for a very important question that for years wasn't addressed until an Amazon comes along, which is, what is your time worth? What is it your time worth? Not only the convenience of talking into that magic box about, reminding you to purchase something or actually even purchasing it, but getting out of the comfort of your home and whatever you're doing, jumping in a car, driving down, to a pickup spot, unless it's absolutely urgent, can you wait a day or two? I mean, matter of fact, there's a lot of stuff that I get. My wife has a black belt in Amazon shopping.
I have a PhD. Yeah, I know. You get same day, and I love it. It's transformed our lives. That's absolutely for sure. All right. Well, we've talked about that one a little bit. We come back. I want to. I've got a question from Brendan, and this is totally from left field, John. I didn't prep you on this one at all, so we'll just wing it as we go. But I want to make sure we take a quick little break here. He said this was actually for yesterday with Paul Orm. We did a show yesterday with Paul Orm on strategic investment, kind of long-term wealth planning. Brendan says, how do you plan to capitalize on the following mega trends: gene editing, blockchain, cannabis and hemp, gold, and the macro debacle? Well, let's talk about that briefly when we come back. Certainly there is some merit to having some exposure to those market sectors, but again, it all comes down to risk management. We'll talk about that with John O'Donnell right after a quick break. If you guys have anything else you want us to discuss on today's show, send it on in at powertradingradio.com. Click the little button there that says Power Blast, send it on in to us, or join our chat. Broadcasting live right now on Power Trading Radio's YouTube channel, as well as Online Trading Academy. Got a bunch of very active social people out there today, so say hello to our friends that are joining us on chat. Send us some questions, and we'll be right back after a short break.
Learning this way is fine when the stakes are low. But when the stakes are high, you need to rely on skill, not just knowledge. At Online Trading Academy, you build your skill one step at a time. We teach our students to trade and invest with a strategy, not a hunch. You learn our methodology, then practice it. You get to make mistakes and ask questions, and watch instructors make live trades. Develop your skill the right way.
Meet Mac. As a trader, he liked the signals that came from technical analysis tools, but they didn't help him find the best trades consistently, so he searched for a new approach. Mac attended Online Trading Academy's free class and discovered their core strategy, a trading methodology that spots when big banks are likely buying and selling, so everyday investors can too. Mac carved out a path to trade and invest with confidence, and so can you.
Call 888-304-8723 or visit us online at tradingacademy.com and schedule your free class today. You're listening to Power Trading Radio Live. Watch the show live or on the archive at powertradingradio.com and YouTube. Or download the podcast from iTunes or wherever fine podcasts are downloaded.
Welcome back to Power Trading Radio, everyone. It is your weekend edition, the show where we just kind of go off on different topics and drift as the show flow may go. John O'Donnell is our guest today, the name I gave him many, many years ago, the Ambassador of Opportunity. And there's a history there. There's a story behind that. We had one viewer in particular who, good riddance, he's no longer watching the show, but he was just Mr. Negative about everything. And he always said, John's just a hater. He's always negative on the markets. And I said, no, apparently you don't understand. He's an optimist and a pessimist at the same time and saying, look, there are opportunities both to the upside and downside in all areas of the market. So I gave him the crown, the Ambassador of Opportunity, because John speaks it like he sees it. And I think we all can make our own evaluations of markets, but it's nice to hear some people's different people's perspectives. So Tom Barr says, BOPIS is buy online, pick up in store. That's the term. Thank you very much for the education out there. John, I mentioned read this question, which is from Brendan, one of our regulars. And forever and always, in the equity markets or in life, then there will always be something that is the new hot topic, right? You remember back in the late 90s, there was this thing called the World Wide Web and .com companies, and what exposure do we give to that? Well, today's age, it might be something a little bit different. I could say, or make the argument that the cannabis space might be maturing a little bit. It still has a long way to go, I believe. But he says, how do you plan to capitalize on the following mega trends? Gene editing, blockchain, cannabis and hemp, gold, and other big macro pieces. How would you, I guess, suggest, not suggesting is not a weird word, but what would be your advice on people looking for exposure to those areas?
Well, that's a huge question, Merlin. I mean,
good. We've got 7 minutes left, John.
I mean, come on. Let's. Well, first of all, as far as the crypto space is concerned, I'm going to leave that to you because I surrender to your experience and expertise in the crypto space. So I don't have a clue on crypto. I have no position in crypto, and so I would subordinate to you on that. what are we talking about, gene splicing?
Gene editing, yeah. There's a lot of talk about how this is going to be the new greatest thing and fix all diseases, et cetera. I mean,
Well, I mean, I think it's, what's the old story? It's old-fashioned research.
Yeah.
Get yourself on the internet and start finding out what firms, there might be some professional-grade research boutiques out there, and you need to find some specialists, that have done the homework to identify, expertise in that category. I don't know who that is. I mean, off the top of my head, it's not some common name that we would say, I need to go buy this or sell this security. Ideally, I'd also take a hard look at some of the mutual fund and ETF companies who have those research capabilities and put together themed funds. So I might, take a category like you so mentioned, and go out there and try to find some ETFs or mutual funds where there's a basket of these participants, that I can have exposure to. I think the individual investor has a very, very difficult time picking individual winners in a new space like that. I mean,
it's a crapshoot. You just don't know.
Yeah, I mean, it's unless you have the time to really do the research and the expertise to get to the right information. A, do you have the time? B, do you have the expertise to take it on? So I think I'd be better off participating in some kind of an index fund.
Sure, I agree.
And I would make that same case for the cannabis sector. How are we going to really sort through which companies are going to be the individual winners? There's no question that the production and consumption of cannabis products are going to grow going forward.
Yep.
Because eventually, I think it'll be legalized across the whole country, perhaps the whole world, for a lot of different reasons. And this is going to take time, but as this plays out over the next 25, 30 years, it's going to probably be a huge category. But you tell me, which individual companies? Now, I know you've taken the time to, know some management at some of these companies, but what did you do? You went out and you met some individuals that are in the industry who gave you access to some information that gave you confidence that you'd like to have some exposure to them.
Right.
But I think the best way to participate in cannabis for someone like me is, if assuming I want to have a long exposure to cannabis, is to buy into some kind of a fund and hope that the fund manager has done a good job of doing all that research and has put together a nice diversified portfolio. And, as the saying goes, a rising tide will lift all boats. And there's no reason over time cannabis can't be a real good speculation.
And if you have a ton of time to really dive deep into it, sure, maybe you can go out and pick individual securities, but it's a crapshoot. It's very difficult to find the next big thing. I agree 100% with John on that front, which is, if you are looking to get into gene editing, I haven't dug deep into there, but I would find maybe those companies that you found to be the leaders in that area, and maybe what I would do is go find a biotech company or a biotech ETF which contained those companies. So now, instead of buying each one individually, being subject to the individual stock risk, I know how to basket a portfolio. Cannabis and hemp, that's an easy one. MJ is probably the biggest, most liquid one out there as far as ETFs go, but again, you have to find out what is fitting your risk profile. If you're looking at blockchain, there's a few of those out there. One called Block. I think TJ actually brought it up right here, which is I can't remember the name of it. It's the Transformational Data Sharing ETF, Amplify. So this is a blockchain ETF, and you can see it's actually done very well. If you look back to January of 2019, it was at $14. You're now at $20. So this is doing very, very well. But again, it's a basket. And surprisingly, when you look at Block, the ETF, what do you think it's holding? These crazy little micro, small cap blockchain companies? No, it's got Microsoft in there. It's got IBM. Granted, there are some other ones in there, but there's big names that are going to make up these ETFs. Artificial intelligence would be another area. The point here is, if you are looking at it from an investment category, and we'll talk strategic investor right now, if you're looking at it long term and you're saying, okay, I feel that these sectors, whether that's cannabis, whether that's gold, whether it's blockchain, gene editing, artificial intelligence, you say, man, I know that these are going to blow up and become the next big thing. If you're a strategic investor, the last thing you're going to want to do is say, you know what, I'm taking my whole portfolio and I'm going to spread it across those four assets, because that is so much risk, right? It's all, what is your goal? What are you trying to achieve? Obviously to make money, but at what rate of return? So I would say if you are looking at that, you want to have most of your money in stable investments that are going to give you I hate to use the word predictable, but historically rates of return are identified. S&P is between 8 and 10%. So maybe I park some on the S&P and then I diversify that portfolio to hedge risk so I don't take any big hits. But then I might add, let's say 10% of my portfolio, I can say I will look at buying some gene editing, blockchain, cannabis, gold, whatever you want, in that 10% block. And that might be too much for you. Some people probably want to do more, but I think that's the biggest challenge is how much to allocate to that. And I think that has to be determined by you. That's all part of mapping out your plan. We talked about strategic investor earlier. That's all in strategic investor, saying, hey, what do I need to achieve? What rate of return do I need to achieve? How long do I have to achieve that? And then it's what mix of assets do I put into that portfolio to help me achieve that rate of return? So I love all those areas. I think gene editing is going to be a huge one. I just don't know when. Blockchain, you guys know my stance. I think cannabis and hemp are great. I'm a big fan of gold, so I even like AI. I think there's a lot of opportunity, but you can't overexpose yourself to it. That's a huge danger and risk for your overall rate of return. Boy, I just went long-winded, John. I look at the clock right now and I realize I'm already over time. What's your schedule like for this weekend? You doing any teaching?
Yeah, I'm going up to Los Angeles. We're having a graduate event up there at Westwood, and I'm looking forward to it.
Yeah, well, all right. A graduate event. Is this just a graduates, I'm assuming?
Yeah, OTA graduates. Okay. We have social events. We host informal social events. Guest speakers come up and speak at our centers all across the country on a regular basis. We have a very active community of users up there, and we have 2 centers up in Los Angeles Metro that are sponsoring these all the time.
Nice. Well, I will be enjoying a nice long weekend. Of course, you got President's Day coming up here, so most of you probably have a long extended weekend. So no events for me. If you are a graduate in the Westwood area, you want to check it out. John will be up there. Always has some great insights into the markets and usually some great charts as well. John, I want to thank you for joining us today. I hope you have a fantastic weekend, my friend. Happy Valentine's Day to you.
Oh, thank you very much, Merlin. I love you too.
I love you too, John. All right, we're going to take a quick break, guys. We come back. I will do a little bit of a show wrap up here. I've got one other question I want to get to real quick on Tesla. Leave that one hanging because I know a lot of you want to check out Tesla. Jorge just said he's got to go and have a great weekend. Well, we'll see you on Monday, Jorge. But the rest of us are going to stay tuned. Got about another 3 or 4 minutes left of the show, and I want to go over Tesla's chart here. So stay tuned, everybody. We'll be right back after a short break.
We've never seen a platform created with the driving principle of helping people consistently make better trading decisions. We know consistently successful investing and trading is about much more than simply taking advantage of the right opportunities. It's also about passing on the wrong ones. Click helps you score potential trade opportunities and calculate stop levels, customizing risk management to be in line with your personal trading plan. Click is also a smart platform. Because it links to OTA Student Portal, Click can serve a custom experience to every user based on what they trade, based on how they trade, their experience level, which OTA classes have been completed, and much more. Simple enough for new investors and powerful enough for the advanced trader, all while integrating OTA's award-winning education, tools, and services.
When we walk into a class and talk to students that have been trained by other platforms and now trading on Click, they're just ecstatic. They can't wait to have it all connected to live execution, which will be coming soon towards the end of the year. And everybody here is very, very excited.
I love it. Not only do I love it, everyone I talk to that's used it loves it. It's so simple and easy. Breaking down the process of core strategy to placing a trade is just phenomenal. And it really shortens the learning curve.
It's one platform to get familiar with that you can then apply to futures, forex, options, proactive investor. It's almost like somehow my thoughts have been distilled down into a sequence of steps. This platform, I feel that I could become an expert in a much, much shorter time, but with a great amount of confidence around actually getting to be able to get the screen to look like I want it to. The fact that Click is an online platform is unbelievable. I'm placing a trade that I'm comfortable with and I'm ready to go, bring it on.
Welcome back to Power Trading Radio Live, fueled by Online Trading Academy. For more information, visit powertradingradio.com.
Hello, everybody. Welcome back to Power Trading Radio. Merlin Rothfeld wrapping up your weekend edition. Hope you enjoyed that session out there with John O'Donnell. We went on a wide variety of different topics out there today. Again, if you'd like to learn more about how to utilize these markets to your advantage using options, futures, forex, and commodities, real estate, whatever, we have classes out there for you to show you how they truly work. If you'd like to know more information, go to powertradingradio.com, click that free class button. Type in your zip code to tell you which of our 48 physical brick and mortar schools are nearest you. Each one has free classes, paid classes, and community events, and much, much more. And John just mentioned he'll be up in Westwood this weekend doing a community event as well for the graduates. So always stay in touch with your local centers to find out what events are going on that maybe further your education and understanding of these financial markets. A quick shout out to Don and Paul. Both of them saying no cannabis for them because they're vets. Thank you so much for all your service. And by the way, I have to say, I am in admiration of, I guess which gentleman it was, Don, a submariner. I'm a movie fan. And I actually have a little bit of claustrophobia, which is an interesting one. And submarine movies are like my favorite type of film. I'm tense watching them from beginning to end. So props to you and doing what you do on a submarine. Man, I couldn't do that. Yeah. And smoking cannabis on a submarine, A, that's got to be pretty crazy, and B, my claustrophobia would be off the charts, and then paranoia on top of that. Oh, I'm sure you saw some crazy things. One day, Don and Paul, we'll do a show just talking about the submariner life. I'm sure that would actually be very, very entertaining. However, we're on a financial show over here, so I have to move on from that one. TJ, bring us economic calendar and show me what we got cooking for Monday. Obviously, Monday is a holiday, bank holiday, so we are going to have nothing going on for the U.S. For the Euro, you have Eurogroup meetings. Canada has foreign securities purchases, and Australia with the monetary policy meeting minutes. Moving on to your earnings calendar, well, that should be rather light, but there's still stuff going on. Deutsche Börse, kind of curious to see how that one ends up. Service Corp, Gardner Denver Holdings. Okay, Flowserve, Transocean Energy, which is rigged. We've actually talked about that one quite a bit on the program recently. Some people saying it's a buy. Look at the trend. It looks like it just wants to keep going down. Otter Tail Corporation as well. Most of these companies probably haven't heard of, but there still is some good stuff reporting earnings. This is just some of the big names. There are other ones as well. Then we have options with Sue O'Grady. Sue will be talking options with us. So we have a very dedicated show going on for our Monday, February 17th performance. That said, you guys have questions for Sue O'Grady, for myself, or for any of our guests on the show, you can always send those in at powertradingradio.com by clicking that Power Blast button. Send them on in 24 hours a day, 7 days a week. The longer lead time you give me, the more likely I can build supporting information and graphics, etc. If you like today's show, like our content, or just want to wish us a happy Valentine's Day, give us a little thumbs up on our YouTube channels. We always like that. If you do give a thumbs down, I'm okay with that as well. But please, down in the chat below it, tell me why you gave us a thumbs down so we can improve our show. Don't be a troll and just sit there and thumbs down for no reason. Let us know why, because we always want to make this show better. That said, on behalf of Gary, TJ, and myself, Eyal Shahar, we want to wish you guys a very happy Valentine's Day. I may not have a date this evening, but I love having a date with you guys every single day at 3 p.m. Pacific, 6 p.m. Eastern Standard Time. Until then, happy trading, everybody. Happy Valentine's Day. We'll see you next week.
You're listening to Power Trading Radio Live. Watch the show live or on the archive at powertradingradio.com and YouTube. Or download the podcast from iTunes or wherever fine podcasts are downloaded.